Why do food costs keep increasing? Could it be cyclical or structural? Since COVID, most commodity prices reach their low. From there, not only has gold climbed to an all-time high, but the feeder cattle or the beef prices have also broken record high. Their percentage gain have even surpassed that of gold. If the price increase is cyclical, it should eventually come down with the cycle. So what are the structural elements that cause some commodities to break new highs, while others are still pending growth? And how can we manage them? My name is Con Hao. My work in this channel is to study behavior science and finance, discover correlation between different markets, and uncover potential opportunities. This analysis is based on technical studies and does not constitute financial advice. Please consult your licensed broker before investing. Let's understand the difference between cyclical and structural impacts on commodity prices. Cyclical factors are short to medium term influence on commodity prices that move in response to recurring patterns such as the business cycle, weather cycle, seasonal harvest, or temporary supply disruption. For example, prices may rise during an economic boom when demand is strong and fall during a recession. Or grain prices may spike due to a drought but normalize when weather conditions improve. These effects are usually temporary and tends to reverse over time as supply and demand rebalance. However, structural factors, on the other hand, are long-term and represents fundamental shifts in the supply and demand balance. They are driven by deeper changes such as climate change, government policies, and we are seeing a lot of this year with tariffs pressure, technological advancement, demographic shift, or resource depletion. For instance, a growing middle class is in emerging markets driving higher demand for meat or stricter ESG rules reducing investment in fossil fuel. All these can permanently lift the price floor of those commodities. Unlike cyclical movement, structural change create a new norm in commodity prices that persists over decades. And we saw how the gold, the soybean, let's look at the soybean oil, and the feeder cattle, and many others have been trending higher, setting a new price floor since 2020 COVID, and started an unprecedented trend after June 2022. Inflation number hit a high of 9%. In my opinion, the main structural issue, it is inflation. It's starting to bite hard after years of accumulated debt and money printing. This inflation is unlikely going to be cyclical this time. It is setting a new price floor. Though inflation has eased to around 3%, but the commodity prices are still holding very firm. Therefore, I benchmark gold prices as a health check for inflation. As long as gold remains elevated, I prefer to stay cautious about inflation, as we have seen different commodities take turns trending higher according to their timing and reason. Next, I believe, is maybe the crude oil could be the one to watch, as we've studied in our tutorial last week. For feeder cattle, let's look at the feeder cattle. It seems to be meeting a mid-term resistance, though I still believe their long-term trend is bullish and it should stay. And let's look at why I say so. And let's look at the monthly chart, and things start to move up because of COVID. And I believe that there's some underlying issue all this while, but COVID is a triggering point. And let's look at this. I would like to look at the low here. And maybe I like to look at this low. And I will, on this perspective, on the monthly chart, I would like to clone this to do a parallel channel. It seems like the other significant high, it was here. The starting point of the new trend is here. And what I'm seeing here is that the feeder cattle or the beef prices seems to be meeting some midterm resistance. And this is where we can cash out and rotate to the next upcoming trend in other assets. The cyclical still applies, but now it is sitting on this new structural change. Because of this, the commodities market is likely to continue trending higher within a much broader range. It is not just risk that we can manage. I'm also seeing many opportunities too. We cannot perfectly time the market, but it is possible to get the market timing right. The market are always telling us on their next move. Feel free to leave any comments below. I love to exchange ideas with you on what is about to come. Really happy that you stayed through this tutorial. You have many great trading weeks ahead.